Hey everyone, welcome back to the channel. Today we're going to take a look at Tesla, just a quick little company overview and some things to think about if you're looking at the company and trying to do a little bit of due diligence and analysis on it. So first, just some quick key stats. Stock price as of 3/18 was about $660. This translates to a market cap of $633 billion, making them the largest automotive company in the world. They were founded in 2003. They actually weren't founded by Elon Musk. If you ever, there's a book about Elon that's pretty interesting, and he was actually an early investor in the company, and then ended up taking it over in around 2008, I believe. They're headquartered out of Palo Alto. Elon Musk, as I said, is the CEO. Zach Kirkhorn is the CFO, and then Drew Baglino is the CTO. And then just a couple quick financial metrics. You can see their revenue, 21.5 billion to 24.6 to 31.5. So it's been growing at a pretty healthy clip, and most of that growth has come from automotive sales. And then from a net income perspective, they lost $1 billion, lost zero point 0.9 billion, and then made 700 million in 2020. So they're definitely turning around. It's a profitable company now, which is good to see. But I don't know if that justifies necessarily the market cap, but that's another discussion. Next thing, just some recent news. This one's just a little funny. Elon Musk changed his title to Techno King of Tesla, and then Zach Kirkhorn, his title was changed to Master of Coin. And this wasn't just like a tweet. Let me pull this up. They actually filed an 8K with the SEC, and effective March 15th, right? The titles of Musk and Kirkhorn changed to Techno King and Master of Coin. Well, they will also retain their positions as CEO and CFO. So, I mean, it's a silly publicity stunt, but it's more than just Elon, tweeting it out as a joke. He actually had the lawyers draft it up and send it to the SEC. And I don't know if this is just him trolling the SEC or what, but a little bit funny. January 27th, they released fourth quarter and full year 2020 financial results. Back in August of 2011, announced a 5-for-1 stock split. Uh, March of last year, the Model 3 became the best-selling electric car in history, selling more than 810,000 units. And then something interesting, 2019, and I'll talk about this here in a second, they announced their Berlin Gigafactory 4 expected completion date of July 2021. And they've actually recently gone on a really large hiring spree in Berlin for that factory. So it's definitely coming up to speed and probably going to be launched here soon. And you could expect production numbers to be able to increase and costs to go down, right? Because I think most of their stuff is built out of their Nevada Gigafactory. So now if you have a production facility in Europe, it'll make your European distribution part easier, and you probably don't have to pay. I'm sure there's some tariffs. Definitely good to see. So it could be positive news for the company now that that's getting up to speed. And a quick overview, I mean, I'm sure most of you understand Tesla, what it is, but they design, develop, manufacture, sell, and lease electric vehicles and energy storage systems. Um, so I guess a key difference between them and a regular automotive manufacturer is Tesla sells direct to customers, and they do it through their website and showrooms, whereas a GM, a Ford, a Volkswagen, there's a dealership that's owned by someone else, and that person buys the cars from the manufacturer and then sells them on to the consumer. So in theory, the model that Tesla has allows them to sell at a lower price because you're getting rid of the middleman. So it's better for the consumer that way, or they can charge a little bit less for their premium vehicle to be more competitive, or they could charge the same and just have higher margins because they're not paying a dealership to be the distributor. They operate mainly under two segments. They have automotive and energy generation and storage. 86% of the revenue is from their automotive division. So, I mean, for all intents and purposes, they are an automotive company. 6% of revenue is from energy generation and storage, which was about 2 billion. So it's still like a decent sized business, but it's not growing at the same pace as the automotive either. So the primary focus here is really the automotive piece. And then 8% of the revenue is from services and other. I didn't dig too much into the 10K. If I had to guess, this might just be, I think the automotive is really So the automotive segment, I think, when they're reporting revenue, is mostly going to be leases and sales of vehicles. This service piece may be something like, servicing vehicles if you have battery replacement, get in an accident, something like that. I think some of it may be part of that. And then also they have some like energy storage services where like you can lease the energy storage devices and pay them a part of it. So I didn't dig too much into it, but I think that's just kind of services and other related to energy and automotive. And then there might also be some like government credits in there that they sell some of their like clean energy credits back and things like that. Um, and then the last thing to note here real quick is they produced 509,000 vehicles in 2020. So the reason I call this out, this is interesting because if we actually, um, you know, a quick Google search, right? Volkswagen produced 9.3 million vehicles, right? So I mean, that's what, 20 times as many vehicles as Tesla. Yet, if we look at Volkswagen's market cap, they're a $176 billion company. So they're producing 20 times as many vehicles and they're valued at a quarter of Tesla. That's crazy. And then GM, 2.5 million cars in 2020, and GM is valued at 85 billion. So what is that, like a seventh? So they're producing, is that 5 times as many cars, and they're valued at 1/7. So clearly Tesla it's priced for growth. People are expecting big things from Tesla, and it'll be interesting to see in the next 5 to 10 years, can they maintain their market share in the electric vehicle space, right? I think GM said they're planning to come out with 50 different electric vehicles by 2025. Porsche, right, just launched a new luxury sports car that's all electric. BMW now has like all electric sedans. So it'll be interesting to see how Tesla kind of unfolds over the next 5 to 10 years, and if they can keep this market share as all the traditional auto manufacturers really switch over into electric vehicle production primarily. And the last thing, just some key growth drivers slash risks to think about. Battery manufacturing, obviously this is a big piece of their thing. They have their Nevada Gigafactory, and Panasonic is actually the manufacturer for them, and they're co-located there. So I'm going to guess there's, a long-term contract in place here where Panasonic will stay on site and produce these batteries for Tesla. Um, However, like Panasonic does have their own, they do have the ability to make their own operational decisions. That's what their 10K says. So, I mean, realistically, if, some other large auto manufacturer came in and was like, hey, Panasonic, come be our exclusive battery producer or something and bail on Tesla, we'll pay all your contract fees. It could get interesting to see what could happen to Tesla in that standpoint. So it's probably one of the more important relationships the company has, and it just needs to be maintained, and probably not anything to worry about there, but just something to think about with all these other companies moving into the battery space. Never know, something could happen. Next thing really is just competition, right? I already touched on this. They've benefited tremendously, first mover advantage, right? They're the first electric vehicle producer and the only one that made like a quality car. I owned a Nissan Leaf at one point. It was a fun little car. It had like 100-mile range. It was cheap. That's why I got it. It was like $35,000 brand new. And then after taxes and incentives, I got like $20,000 off. So it was like a $15,000 for a brand new electric car. It was cool. But it just like obviously didn't compare to the Tesla Model 3 at the time. But as more and more manufacturers come out with new cars, hopefully Tesla doesn't fizzle out, so that'll be interesting to see. Next thing really is regulations. And there's a third point I didn't type up here, but I can hit on. So they've had issues selling direct to consumers. Certain states and countries don't want that. They want it to go through a middleman. So, similar to like how Uber has all these regulatory issues, there could be issues there. I think Tesla's overcame a lot of these, but could be costly or difficult to penetrate certain markets if they refuse to go to the dealership model. But on the opposite side of regulations, a lot of states have issued kind of bans to traditional combustion engine vehicles. And they have like lofty goals. I think California was like 2025, like no more combustion engines on the road or something. I don't think that that'll happen that quickly, but it's coming, right? And Tesla's in a good spot to be the provider of vehicles. And the third thing here, though, is that I didn't type up, but their cars are affordable because the government is giving credits and rebates. Um, so, right, I think certain states they offer like 1,500 all the way up to like $5,000 for buying an electric vehicle. And then the federal government, I don't know if they still do. When I bought my Nissan Leaf, I got a $10,000 like federal government credit for buying electric vehicle. Then I got a $5,000 vehicle from or credit from the state. So it literally took half the price sticker price off. So if those go away, right, Teslas become more expensive compared to the traditional auto manufacturers. And the last thing really is this company is Elon Musk, right? Like, say what you will, say what you want. Like, without Elon, you would not be valued at 633 billion. People believe in him, they believe in his ideas. They trust him to lead this company and just, you know what I mean, change the world, right? So if anything happens to Elon, if he decides to step aside, retire, or tweets a couple things that the SEC doesn't like because he's already on the short list with them, right? They could bar him from being a CEO of a publicly traded company. So just something to think about. Like his actions could have serious repercussions as a shareholder. So something to consider when looking at the company. But this was just a short little recap of Tesla. Some information to think about if you're starting to do the diligence process on it. Would highly recommend you go read their 10K that they put out at the start of this year, and just get more familiar with the business and really understand it because it's priced for growth. And the question is, are they going to be able to hit all these milestones and grow? And a lot of times I hear like, oh, Tesla's not an auto manufacturer. They're a clean energy company. And I'm like, yeah, but not really. Like if you go look at their financials, right? 90% of their revenue is automotive. Like, say what you want, like, sure. I'm sure Volkswagen has like 1% of their sales in clothing. That doesn't mean they're not an auto manufacturer. Like, they sell accessories and random stuff, but like, it's such a small percentage of their revenue. Like, they are an auto manufacturer first and foremost. That's where their capital expenditures are going. And for anyone to try to make the argument otherwise for Tesla, I think is silly. And I think, you need to look at them as a auto manufacturer, not as a tech company. So I don't know. It'll be interesting to see, but hope you found this useful. Any questions or comments, please leave them below. Thanks.